Charlie Munger is known for being Warren Buffett's right-hand man. Educated at Harvard with a net worth of $1.7 billion and now at 96 years old. Interesting, Charlie Munger was responsible for changing the way Warren Buffett invested. Before Charlie Munger, Warren Buffett's strategy Warren referred to as cigar butt investing, finding companies that had one last puff in them that you could make a decent profit on. Charlie had to explain to Warren that although this had worked and made him a lot of money, this strategy wasn't going to scale. It was much smarter to find great businesses that were temporarily under a bit of pressure and then stay with them for the long term. They soon became business partners and have worked alongside each other for the last 40 years. In this video, we're going to look at the Charlie Munger investing philosophy, which is a bit contrarian. As you'll see, he's not a big fan of diversification. We'll then take a look at two investment portfolios. First is the Charlie Munger family portfolio, followed by an investment portfolio that he manages at the Daily Journal. As always, if you do find anything in this video useful, be sure to drop a like. That would be much appreciated, as every like does help. Okay, sit back and relax, guys. Here are the investment portfolios of Charlie Munger, Warren Buffett's right-hand man. So here is what we're going to be looking at. We're first going to take a look at a quick video clip of Charlie and Warren as they discuss diversification, as it's relevant to the whole piece, and interestingly, it goes against traditional teaching. We'll then take a look at the Charlie Munger family portfolio so you can see where he puts his own family's money. And then we'll take a look at the Daily Journal portfolio, which is a company that Charlie is the chairman of, just so you can see a comparison. All intelligent investing is value investing, acquiring more than you are paying for.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that's a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses that are understandable to a single human being in all likelihood. And to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness. And it's conventional practice, and it may, if all you have to achieve is average, it may preserve your job, but it's a confession in our view that you don't really understand the businesses that you own. On a personal portfolio basis, I own one stock, but it's a business I know, and it leaves me very comfortable. So, do I need to own 28 stocks in order to have proper diversification? It'd be nonsense. And within Berkshire, I could pick out 3 of our businesses, and I would be very happy if they were the only businesses we owned and I had all my money in Berkshire. Now, I love it, the fact that we can find more than that and that we keep adding to it. But 3 wonderful businesses is more than you need in this life to do very well. Charlie?
Yeah, what he's saying is that much of what is taught in modern corporate finance courses is twaddle.
Do you want to elaborate on that, Charlie?
You cannot believe this stuff. I mean, it's a modern portfolio theory, and it's.
It has no utility, but I mean, it will tell you how to do average. But I think anybody can figure out how to do average in 5th grade. I mean, it's just not that difficult, and it's elaborate, and there's lots of little Greek letters and all kinds of things to make you feel that you're in the big leagues. But there is no value added.
I have great difficulty with it because I am something of a student of dementia. And I have.
We hang around a lot together.
And I can ordinarily classify dementia, on some theory, structure of models, but the modern portfolio theory, it involves a type of dementia I just can't even classify. No. Something very strange is going on.
Yeah. If you find 3 wonderful businesses in your life, you'll get very rich. And if you understand them, bad things aren't going to happen to those 3. I mean, that's the characteristic of it.
By the way, maybe that's the reason there's so much dementia. If you believe what Warren said, you teach the whole course in about a week.
Yeah. Mm.
So first up is the Munger family portfolio. And this is just made up of 3 positions, pretty much like he was explaining in the video. We have a block of Costco, a block of Berkshire Hathaway, and a block of Himalaya. So the first thing to point out is that this is a private portfolio, so we don't actually know the exact amounts in each position. But Charlie has been on camera and in interviews, and he refers to it as this. His money, he's got a block in Costco, a block in Berkshire Hathaway, and a block in Himalaya, and then a smattering of other companies. So I've put it as an equal weighting, so this is a good representation of what it might look like. Now, as you saw, he said he wasn't a fan of diversification, which is why he only invested in 3 companies. But for me, this is a little bit misleading, because Berkshire Hathaway is a company of companies. And that's the same with Himalaya as well. It's a company of companies. Let me show you what I mean. So this is actually the portfolio of Berkshire Hathaway, and you can see this is an entire company of companies. So by default, he's also invested into Apple, Bank of America, Coca-Cola, American Express, Kraft Heinz, as well as many other companies. Same is true with Himalaya. This is actually an investment company made up of companies. So this one is approximately half is in Micron Technology, 30% in Bank of America, and then positions in Facebook and Google. So going back to Charlie's portfolio, although it's only 3 positions, this makes up over 30 different companies. So I would say this is a very well diversified portfolio. The big money is not in the buying or selling, but in the waiting. And the second portfolio is a company that he is chairman of. And this is made up of 4 different positions. It's approximately $100 million portfolio. But this time, 56% of it is in Bank of America and 38% is in Wells Fargo. So as you can see, this one follows a lot closer to his philosophy. The vast majority of this portfolio is only 2 positions, and they're also both bank stocks. Then there is 5% in US Bancorp, and then just a fraction in POSCO, and I believe this is a Korean steel making business. But as you can see, for a comparison, the vast majority of this portfolio is only 2 businesses. The first 100 grand is a bitch, but you've got to do it. If it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on $100,000. After that, you can ease off a bit. Now, I do love this quote because I think it's saying that the first 100 grand is the hardest to make. But then once compounding kicks in, the money that follows is a lot easier, but the first 100 is the hardest. So there you are, guys. That was the investment portfolios of Charlie Munger, Warren Buffett's right-hand man. As you saw in the interview, both Warren and Charlie claim that they are not big on diversification. However, both their portfolios contain quite a lot of companies. So make of that as you will. If you do enjoy seeing the portfolios of billionaires, I have done the portfolio also of Warren Buffett, Jeff Bezos, Bill Gates, Ray Dalio. So if you'd like to see those, then links below this video. I do have just one favor to ask. If you did find anything in this video useful, be sure to drop a like. That would be much appreciated, as every like does help. If you haven't yet subscribed, be sure to click the subscribe button below and join us. I do have some great videos coming up that you don't want to miss. And if you've got any questions, any comments, just post them below now. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.